Jon Carruthers-Green, Chris Jackson, welcome back to the MEPS Speaking of Steel studio. A really eventful month, really eventful few weeks in European steel industry. Revisions finally for the EU steel safeguard measures have come through, so we've got lots to talk about today. We're slightly setting aside the US steel tariffs in this episode, but we'll address that elsewhere. So I guess, Jon, great to have you back. Have you been keeping on top of all the developments? That's what I'm looking for from you. So
yeah, thank you. We finally got details of what the changes were going to be, and actually with a couple of weeks to understand them and digest them before they came into effect, unlike we did in July. I suppose the big one for me is going to be the introduction of these country caps on 16 different product categories now. So previously we had it on hot rolled coil and wire rod, where within the other countries category, any individual country that was using that quota was only allowed to use 15%. So it seems that that's actually been really good for those products. So this has been sort of extended to around 16 other product categories in total. It's not always 15%. It really depends on which one of these products it is that as to where this cap is, and that's kind of been decided on a level based on sort of how severe the import pressure was assessed. So for hot rolled coil, that's actually been dropped down to 13%, but then it's also been introduced for things like cold rolled coil. We've got that now on plate, on rebar. We've got it on a whole load of sort of flat and long products, even on some stainless now.
Okay, so I mean, Chris, as we probably watched this unfold, we initially got sort of some draft measures that were sent to the WTO, and then it came back as an official document, largely unchanged. Just to start off, I guess, what was the initial reaction as you were constantly speaking to research contacts throughout the month? I guess there was a bit of uncertainty straight from the off.
Yeah, I think that uncertainty is quite key. I think obviously in the run-up to the safeguard announcement, you obviously saw certain impacts, certain implications. I guess buyers were naturally taking a step back, adopting a bit of a wait-and-see mode, maybe keeping their order placement to a minimum, and you certainly got the sense from a lot of discussions that we had that people were looking for local, regional supply in the run-up to the safeguard announcement, as they were typically unaware what would happen. And now we're in that post-announcement phase. I guess you're starting to see some impacts and trends emerge, with people looking at their procurement strategies very closely and maybe looking how much they buy locally and regionally against maybe what they buy from imports. But as Jon mentioned there, I think we've certainly got the feeling that imports come with an element of risk, and we've seen that implication on hot rolled coil in particular in recent times. And as Jon said, the net has been cast far and wide, and it will sure have implications for a lot of the steel categories across flat and long products.
So, Jon, from what's been announced, is it already emerged sort of what the implications might be for certain categories of steel? Is there particular anxiety about shortages in particular areas, for example?
Well, I think it's particular areas from particular sources. I think that's the whole point of these new caps. What we saw when the hot rolled coil cap was introduced was that the other country's quota couldn't actually be reduced under sort of the safeguard mechanism. Just the way the rules work means you can't do that. Yeah. But by putting this country cap in, you can effectively cut the amount of steel that's coming in. So having this sort of expanded to other categories is really going to be quite important for some of them. Yeah. So I was just looking through some of the numbers before, and it looks like it's going to be sort of cold rolled coil is going to be another one of those categories. It's going to be sort of quite affected. But then we also saw rebar and plate products. I think those are probably the first ones where we're going to really see that bit of a pinch.
And it's a very interesting dynamic in terms of hot rolled coil as well, because that's almost been a bit of a precursor to the other categories. I think in recent times, people typically away from local regional supply, we're looking at Japan, South Korea, Taiwan as traditional exporters, traditional countries who gave them a supply option away from their regional options. But certainly with the the anti-dumping duty that was in place prior to the announcement, and the original country cap, then that option became increasingly limited, and it became increasingly apparent in the early part of the year that people we were speaking to were scouring the world for alternative sources of supply. Indonesia was being talked about in a lot of discussions, and we're starting to see that come to fruition now with shipments coming in from the likes of Dexin, from POSCO, Krakatau, that's starting to hit European shores. So in a way, we've seen the impact that it's had on hot roll coil and how that's changed the diversion of trade. I'm sure we'll see similar impacts during the course of the year for the other product categories as well.
So I think that's a key point for these other country caps, is when the safeguards were first introduced, if you were a large exporter of this particular product into Europe, you would have been caught up with the country-specific quotas. You would have had one of those. So what's happened since 2018, though, is that, of course, traders, importers are naturally going to start looking elsewhere. So we've had this sort of big growth in supply from places like Vietnam and Taiwan and Japan. And these caps are really sort of designed to sort of take us back to sort of a level where we were before these options were explored.
Yeah, and it's interesting because I guess people are obviously looking at their procurement strategies very, very closely. And I think the European mills have almost capitalised and taken advantage of the situation. I think, again, in the run-up to the safeguard announcement, there was a series of price initiatives launched, I guess, typically by ArcelorMittal as the market leader, and then the other producers soon followed suit. And we did see a step-by-step increase in flat product prices, particularly. And interestingly, as we've come up to the safeguard announcement, there was obviously hints of what would happen, and now we're obviously seeing what is happening. And it's almost like the market has taken a little bit of a breather, maybe assessing the situation. And then in the last 48 hours, we understand that Arcelor again have announced another price hike. So I think they're confident that buyers will look at the market situation, maybe assess that their market options will be limited from those traditional exporters, that they may find the likes of Indonesia, Malaysia, Algeria long-term sources of supply, or medium to long-term sources of supply, but that it'll require the exact certification. It'll need the customer technical liaison that comes with any new relationship. So I think, again, the European mills have sort of spotted an opportunity to raise prices higher. But obviously, with market demands being quite low in Europe and market sentiment still being on the weaker side, we still understand that people are confident of buying shy at those levels, but there's certainly a direction of travel upwards at the moment.
Yeah, you used that term that the market was probably taking a breather. It feels like the market's been taking a breather for quite a while already, doesn't it? It's just been another layer of uncertainty, hasn't it, really?
I think it has, and I think that supply side considerations have been a key factor in why prices have moved up, and obviously the safeguards and the non-European imports have been a catalyst for that. But I think you can't really hide away from the local regional supply as well. I think the likes of Arcelor, we hear of production being curtailed in France, from their Dunkirk and Fos-sur-Mer operations, in their German operations earlier on in the year. So I think there is a feeling amongst buyers that they're quite content where supply mill lead times are. They are slightly extended from local regional mills, but with that scenario plus the safeguard announcement, it has given an artificial view of supply tightness, which has helped prices go up in the last few months, and there may be potential for slight rises again in the near term.
Okay, there were other changes as well, weren't there, John, in these revisions? That interesting measures with the Russia, Belarus withdrawal of that section of the quota, and also a few changes to how you can access material at the end of quota periods. Is that right?
So there was quite a few changes. Certainly the reduction of the allowance of the use of that Russian and Belarusian material, which had previously been sort of spread out amongst other countries. The idea being that they would have the chance then to make up for what was lost from those countries. That's been stripped away. As you say, there's also been revisions around the rollover of unused quotas from one quarter to another, or potentially the use of the all countries quota in that final quarter in the year. But I think the key part of that really comes from the the categorization that the European Commission have done with regards to each one of these product categories.
Yeah.
So they've actually gone and analysed which ones where they believe there's going to be sort of significant import pressure, to moderate import pressure, or to product categories where they don't think there's any at all. And each one of these new measures is really based on where you fall in those categories. So what they try to do is sort of tighten the screws on those products where the European mills are struggling to compete, whereas they've been a lot more lax with other product categories where okay, there's imports, but it's not causing too much of an issue for European suppliers.
And that's an interesting twist on I guess the recent announcement. I know we've seen obviously well-established measures on hot roll coil, but now, as John mentioned, we're starting to see that on the value-added products, the cold roll coil, the hot dip galvanised, which I guess typically we're operating, we're in an 80-100 euro premium between hot rolled and the value-added. Obviously, if people feel their buying options are increasingly limited on the value-added products as well, it'll be interesting to see how that pricing dynamic changes over time. And again, on the flat product side, we've seen for plates, a lot of the people we talk to, a bit of a mixed view. Some people have welcomed the imports that they have options available from South Korea, Indonesia. They've been typically significant exporters into Europe, particularly into Spain, into Italy as well. But again, during discussions over the last 12 months, people have maybe asked or maybe lobbied, if you like, for that additional protection. And I guess the new safeguard announcement is maybe a step in that direction. So again, it's maybe something that will be a benefit to the European plate manufacturers and re-rollers, and something that will help them as they push their own pricing ambitions as well.
Yeah, I mean, we'd heard from Eurofer prior to these revisions being announced, even the draft version. You know, they were very keen to lobby, as Chris says, for stricter measures. What were they really seeking, John? And has this really come up short? I think initially the reaction was very lukewarm, but over time,
yeah, well, of course, Eurofer, they're there to stand up for the European steel industry, whereas I suppose the Commission's got to kind of balance the interests of the steel industry, but then also people buying this material a little bit further down the chain. The kind of measures that Eurofer were asking for, some of those really couldn't have been done under sort of the way the safeguard is managed. So they were asking for an actual cut in the quotas, which unfortunately is something that couldn't actually have been done. But like I said earlier, I think the European Commission's been quite crafty by adding a lot more of these country caps, because while they can't actually cut the quota, this effectively does that.
Yeah.
So of course Europe is going to turn around and say not enough has been done. I think even if they got pretty much everything on their wish list, they would have turned around and said even more could be done.
Yeah.
I think when we're trying to balance the interests of not just the steel industry, but everybody in Europe, then are you going to satisfy anyone? Are you going to satisfy nobody? I think it's very difficult.
Yeah, it's interesting. I guess that point is you almost had a mixed reaction. It's almost when we were in the lead up to the announcement. Obviously, there was speculation, and then maybe draft proposals, and then the actual implementation. I think at that time you seemed to get the feeling that people were talking down the measures, that maybe they weren't severe enough. I think obviously with what we're seeing in the US and the global era of protectionism, I guess again people want to defend Europeans' corner. The steelmakers, obviously there's a strategic, maybe in some ways a defence military aspect to some of the operations. So again, there's a feeling that maybe there should be adequate protection in place. But then from the buyers we speak to, I think they're naturally a little bit concerned that they want as many buying options at their disposal. Obviously, the low-cost exporters do give them an option to be competitive, and also in downstream markets. And there is a feeling that now, while demand generally in Europe is weaker than anticipated, that supply is not necessarily an issue from local regional options. But if demand were to improve and we start to see steel demand and steel consumption rise as everyone wants it to do, then that will put an extra degree of tightness on supply, and then we may start seeing that the mills have quite a lot of free rein to raise prices, and that's when buyers will find it difficult to be competitive in those downstream markets.
So is there a risk here that importers can adapt quite quickly to these changes, do you think? And this, the resulting effect might be quite mild on prices, I guess, going forward.
I think so. I think generally you tend to get a bit of a two-tiered approach. I think traditionally you do get some countries who tend to be quite disciplined in their in what they are exporting, and they almost have one eye on the quota in terms of what they are able to sell, and others maybe a little bit more scattergun approach, and maybe again that leaves buyers and themselves open to potential duties further down the line. But something that we've seen in Europe is obviously some quotas being fully exhausted, and again it's becoming a common principle that when that scenario arises, especially when the market is weak, that a lot of buyers will be prepared to wait until say April 1st, but they will wait now till July the 1st before customs clearing the material. So particularly in Italy and other parts of Europe, that's becoming a more of a common occurrence and something that buyers are almost adapting to as a new normal in many ways.
Yeah, absolutely. So we've been focusing very much on the steel safeguard measures here, John, but subsequently, very soon after that announcement, there was talk of the Steel and Metals Action Plan that the European Commission launched. A lot of it seems to be proposed plans that are in the making, but there was also some quite illuminating stuff in there, and very closely related to the subjects that we've already covered off. So what were the key points that we saw in that?
So with the steel and metals plan, first of all, there was a call to get energy prices down. I think everybody understands that that's going to be a major issue for the costs for steelmakers, and certainly if to get that under control, that's really going to help. But I think there was two other points that I'd like to touch on. First of all, there was talk of a melt and pour rule being introduced. Now, essentially, what we potentially have seen is that material coming from China goes to somewhere like Vietnam, for example, gets processed before coming into the European market. By doing so, the thought there is that they're going to avoid some of the anti-dumping tariffs that have really sort of kept a cap on this Chinese material. With the melt and pour rule being applied, then the tariffs that would apply would be anything sort of related to China rather than to Vietnam. And because there's a whole lot more sort of trade protection on the Chinese origin steel, it would effectively sort of block that out. Now, this isn't a firm plan. This is something that the Commission's going to consider. But if that gets implemented, then I think that could potentially make things a lot more difficult for importers. The second one I think is the big one. We've had a lot of talk before about June 2026. The safeguards expire. What happens then? Everybody talks about this. We finally got next year 2026. Yeah. So we finally got some communication from the European Commission saying that something will take its place. It won't be a safeguard because essentially that's been sort of barred by that 8-year term, but there will be a new trade defence mechanism that's going to be in place. So the steel industry, the people we speak to, they've been worried about this. Finally, there's some kind of announcement as to confirming that there will be something from this date. No details yet. No idea exactly how it's going to be covered. But the one thing they did mention is it's going to be another tariff rate quota kind of system, very similar to the safeguards.
Where was the anxiety before then, John? I mean, is this, what do they need to do to bring in something that sounds virtually identical? Is it just a rebranding exercise, or I guess there are WTO rules underlying all that?
Well, that's essentially it. So the WTO rules say the safeguards have got to expire after 8 years, and that's where we get to in June 26. There's a whole range of options that the Commission could have used or can potentially use. We've seen, like in the US, they've called the steel industry sort of a nationally critical industry, and therefore different rules can apply. We've heard talk of the anti-coercion tool that the European Union has in order to maybe sort of counteract some of these additional tariffs that could be coming from the US. So I think the scheme that we will end up with will be very similar to the safeguards. Whether you call it rebranded, whether you call it what, I think of essentially we're going to see something very similar.
And it's interesting the initial reaction that we've had from a lot of the people we speak to about the Steel Action Plan. I know people, firstly, they welcome a plan. I think when there's clear objectives and a clear timeline, I think that's something that's welcome generally by everyone we speak to. Naturally, there's a hint of scepticism about what and to what degree this will come to fruition. I think, again, a lot of people, while seeing the steps as positive, do say for the future of the European steel industry and the downstream industries is they're wanting to create the environment for a long-lasting, sustainable demand. I think everyone across the supply chain sees that as key. So obviously the long-term success of everyone across the supply chain. And I guess people have been looking at Germany quite closely. Demand there has been very weak for a prolonged period of time, but the recent announcement there of significant investment based in infrastructure, centred obviously around defence as well, again, could possibly act as a catalyst there in terms of driving demand there, possibly not in the near term, but certainly in the medium to long term. And as we see in Germany, when the German market is strong, then I think the neighbouring markets see the benefit of that firstly in exporting to Germany, and secondly with the German service centres having less of a presence in their countries as well. So that's a situation to keep an eye on. But obviously, long-lasting and thriving demand will be key alongside the measures outlined in the action plan as well.
Yeah, absolutely. And I mean, I think we've spoken before in previous podcasts the fact that we didn't really expect CBAM to provide the level of protection, that would allow them to continue without any safeguards. So I guess that's some certainty for the sector, isn't it? Really.
Yeah, like I say, there's going to be a long time before we get any actual detail on this, but simply an indication that something will be there has to put some minds at ease.
Okay. Often we've addressed safeguards as a very sort of EU or US centric sort of subject matter. Trade defence is generally against Asian imports, but there's been a lot of developments also this month among Asian countries, hasn't there, John, in terms of anti-dumping and safeguard measures of their own? What's happening out there? It's a growing trend, isn't it?
So these barriers are going up around the world, not just in Europe. I think if we sort of deal with those sort of separately, if we talk about sort of the anti-dumping measures, we're seeing a lot of new measures being applied by Korea, Taiwan, Vietnam, very much sort of like a crisscross of measures being applied against each other. Each one essentially just trying to protect their own industry. When we look at the safeguards, though, we've also seen talk of Indian safeguards being implemented. Not quite as comprehensive as the ones in Europe, but certainly expectation that's going to be coming in very soon. And then also, I believe South Africa, they've talked about safeguard measures as well. So it really sort of just goes to show that these barriers are going up now.
Yeah, I think generally globally you've got an air of protectionist. There's certainly a protectionist environment, and Asia's no exception at the moment. I guess typically people are looking at the direct threat of China. I guess the Chinese domestic market has been systematically weak now for a long period of time. The ongoing problems in the real estate segment obviously are felt at China, but obviously in the region as well. And the series of rounds of stimulus measures, I guess the latest one in the National Congress meeting, again people are looking at that to see whether it will provide a long-term boost, but again the early signs are that maybe there's a short-term impact, and then that impact has waned over time. So naturally those countries that are in the eye of the storm, if you like, in terms of Chinese exports, South Korea, Vietnam, I guess again the likes of POSCO, Hyundai in Korea, Formosa and Hofat in Vietnam are taking steps to defend their market share at home. Ironically, when they're very keen to sell their surplus stock around the world, but again try and reduce the the Chinese threat, and again try and maintain their market share. And we have seen, particularly in Vietnam, we have seen prices rise to an extent based on the measures in place. And it's certainly something that we do expect in South Korea also. So again, countries that not necessarily go down the protectionist line, but I think with the global situation, I guess, like I said, everyone is keen to defend what they have at home, but then again, in the weak domestic market, look at what they can sell globally. So again, an interesting perspective from both sides.
Yeah, it's something I think we definitely saw in the ISR this month reflected that those producers in Asia that we traditionally see as targeting European markets, if they're protected themselves, then they can also focus on markets closer to home, can't they? So
yeah, I guess you get in the sense that again, from our discussions in Asia, that a lot of the companies we speak to are casting the net far and wide. I guess they're seeing some doors closed, but they're looking where the doors are open. So they may be looking at the South America, maybe looking at the Middle East. And I guess, again, people in today's climate with the, again, sentiment and demand being certainly very weaker than anticipated, that they're very keen to sell what they can, where they can. So again, if one door's closing, as we're finding with China, they're certainly looking for the other avenues. And I guess the net result is everyone's putting the barriers up and the protections in place, which I guess economically the net effect of that is ultimately negative. But I guess the natural instinct is to defend what you have, but then obviously target opportunities elsewhere as well.
Yeah, okay. Well, one of those doors that we've definitely seen close in recent times has been the US market. So we're going to address that in a separate part of the podcast, which people can also access via the website or via their chosen podcast provider. So we'll finish there, guys, on the EU front. But thank
you
ever so much for joining
thanks,
us.
Tom.
It's
Yeah,
been
thank
great. John, thanks for your insight as ever. Chris, your feedback from the market, really useful. Thanks ever so much.
Thank you, Tom.
Excellent. Thanks, guys.